This week on the podcast, we're going to talk about election cycles and how that influences or could influence pilots during this period. Let's get into it this week here on the show.
We've got some turbulence up ahead. Reach out to the pilot's planner.
Welcome into this week's edition of the Wealthy Pilots Podcast with Scott Osborn and myself as we talk investing, finance, retirement, and election cycles. I mean, you got to, right, Scott? I mean, it's pretty much everywhere right now. So what's going on, brother? How you doing?
Hey, good morning. Great. How are you?
I'm doing pretty good. Hanging in there. Looking forward to chatting with you a little bit.
Heck yeah.
Let's get into it. Let's just fire this right off and start talking about what the election cycle can mean sometimes historically, or just in general when it comes to this kind of, time of year. It's already August is historically a little volatile for the markets anyway, if you kind of go back and look at it. But an election year, does it make or break a big difference? What say you? What's going on?
Yeah. I mean, ultimately, elections do have consequences, right? I mean, they impact our foreign policy, our economic policy, monetary policy, tax rates, et cetera. So, all those things factor into, I think, ultimately how analysts are looking at, future pricing for companies. And it does impact, I would say, short term, what might happen in the market. But, if you just look back long term and keep that long term perspective, I mean, the long term trend line as the market tends to go up and to the right and just continues to march on. And so,
which we know, right? But I mean,
yeah.
what do you have? Do you have, I suppose that's the big question. Do you have the timeline to wait that out? Right.
Yeah. I mean, ultimately, what that gets to the question of like, hey, what is a long-term investor? Right. And historically we would say, hey, if you got 5 years, you got like a 90% chance of the market being positive. And so, historically, if our pilots are outside of 5 years of retirement, then we would say we want you fully invested and staying aggressive and have all your contributions going in. And then when we get a little bit closer to that, like our retirement red zone conversation we had previously, we want to start building that safe bucket up. So that way you don't care anything that's going on in the next 5 years. And we're hopeful that that's not going to have a significant impact on your plan.
Well, that's the trigger though, isn't it, Scott? Right. That's where I think real value, for folks like yourself, advisors come into play is to say, look, let me help talk you off that cliff a little bit, because we see, at the time we're taping this podcast, this is August of 24, about the second week or so. And we just had a couple of really tough tech days, right? Not too long ago, just the beginning of the month. And you just mentioned the fact that if it's more than 5 years out, this is future money. But still, when we see it go down, nobody likes to see it go down. So therefore we panic a little bit, right? And I think having an advisor to go, okay, I get it. It's scary, but let's pump the brakes. Let's not do anything dramatic, because this is later money and you should have that time. Fair?
Or absolutely. I mean, it's August of 24 right now.
Right.
So you look back in August of 2019, 5 years ago.
Okay.
I mean, the market's up 85% since then. And, we've had a global pandemic, war in Europe, a year-long bear market in 2022. And, we're not only surviving those things, but, short term, there's some pain involved, but, long term, I mean, heck, long term being 3 to 5 years in this case, we're still thriving through those. So, I mean, it really comes down, I think, to the investor sentiment. I mean, if you're going to be somebody who gets scared and who, it lets your emotions take over, you're susceptible to making some bad decisions. I don't typically see that with a lot of our pilots.
That's good.
They got nerves of steel, man. And that's what makes them.
Well, you kind of have to, don't you?
That's what makes them great at their jobs. But I like to still get out there and educate in terms of, because they hear things from other people around like, oh man, the market was getting real shaky, so I put some money in cash, and then it triggers some conversations of, hey, should we be doing anything different? Yeah. And a lot of times, especially if they're younger, it's like, just keep pumping money in, man. I mean, when the market's down 8%, and you get a few months worth of contributions, and there you were able to buy those shares at a discount.
I was going to say, that's a great point. I just got an email the other day. Somebody said, hey, I'm a little concerned about the market being down. Should I back off on my contributions? I'm still working, and it's like, well, no, it's this weird thing we have in our head. We all like a sale. We all like things on sale, except the stock market.
Yeah.
When the stock market's down, I get it. It sucks, but it's actually now on sale. So if you are dollar cost averaging, Scott, by still pumping in through your paycheck and through your contribution plans, then that's actually a good place to be.
Right. Well, and ultimately, it's like when you look back and say, hey, if I'm trying to dictate how I'm going to invest based off of who's in charge from a political standpoint, it's terrible investment policy. Yeah. I mean, you look, if you, I was looking at a chart the other day, it was like if you had invested in the market only when Republicans were in charge, a $10,000 investment over this 50 years would have grown to 100,000. With only Democrats, it would grow to 500,000. If you stayed invested for both over that same time period, it grew to like a couple million. And so, ultimately when we have, like what they call like a purple Congress, right? Or a purple government where we have a split government, that's typically when the market does the best.
Exactly.
And so, historically, at the end of the day, it should be setting us free because like, it doesn't matter. Like the government can only do so much to slow us down because these companies are constantly trying to figure out how to return value to the shareholder and look out on the horizon and interpret tax policies and make decisions and do the best that they can. And like, we should all feel super optimistic about not only the global markets, but especially here in the US. And we got a lot of great people running these companies. And maybe a CEO here or there is questionable or something. But if you look at across a lot of the executive and management teams, and they're all the people that we go to school with and go to church with that care about doing a good job. And they're going to go and do a good job to make money for us as investors too. So,
right. Yeah. And you think about that Congress comment, right? I mean, and the government comment, being that purple government, when they're kind of split right there, they don't get anything done, which is why the market tends to like it, because then there's not a lot of movement, right? There's not a lot of swinging one way or the other. So the market's like, okay, this is fairly stable.
Yeah.
Right. It's fairly stable. So interesting stuff. So any final thoughts or anything when it comes to just, if you're worried about things when it comes to an election year, is the best advice to do nothing, or is it to reshore up that plan, get that second opinion, or just run through it again just to make sure you're comfortable so that you don't step into it?
Yeah, I mean, I think it's really being intentional with like, what are we buying? I mean, you want to make sure we're buying the right things, we're buying the right long-term investments, and we're not making long-term policy off of short-term things, and ultimately there's going to be a ton of talking heads out there that are trying to, get fear out there and get clicks. And you're going to see all the headlines of, if Trump wins, the market's going to crash. Here's 5 reasons why from MSNBC or whatever. And they're doing all that for clicks. They're not doing all that for your benefit as an investor. And so at the end of the day, if you can just develop a good plan and start purchasing shares of America and the world's best companies to help you accomplish that plan, you're going to be in a much better spot. And so, I do think these seasons are good in terms of, hey, it's every 4 years. And it is a good time to almost step back and say, hey, do I need to start, if I'm an older pilot, do I need to start building my safe bucket? Maybe I've had some health issues and I'm going to have to retire sooner than I thought, or whatever the case is. Or we think maybe there's a recession coming and I'm going to get a buyout. If you want to scenario plan those things to make sure that your plan is resilient enough for some short-term downturns, yeah, absolutely. Those are the best reasons to hop on a call with somebody like myself and go through the plan and make sure that you and your spouse are aligned to all the scenarios that you have out there and get a plan in place and act on it.
Yeah, exactly. Stress test it. I mean, to your point, pilots go through a lot of stress. They handle a lot of stress. So let's stress test that plan and that strategy to make sure that it's going to handle whatever's going to thrown at you. Because, the media is going to they're inflammatory. They're going to do what they're going to do. We heard that when Trump was elected the first time that the market would go terrible. It didn't. We heard that when Biden got in. It didn't. Right. So, it's like, all right, just, put all that noise to the side and get get a strategy that works exactly for you. And so, all right, folks, thanks for hanging out with Scott and I as we talk a little bit about election cycles this year. We won't beat this up too much because it's everywhere. And so we'll make sure we get on to some other topics of conversation in the next episode. So make sure you subscribe to the new podcast that we're doing. This is the Wealthy Pilots Podcast. You can find us on Apple and Spotify and YouTube now. So click on that subscribe button and the little notification bell so you can catch new episodes when they come out. Check the show notes below for links to all the stuff to get a hold of Scott if you got some questions, need some help. Of course, we got the number and everything right on the screen at the same time we're talking, but you can make it easy on yourself. Just check the show notes and go from there. Scott, my friend, thanks for hanging out, brother.
Good to see you, man.
Talk to you soon right here on the Wealthy Pilots Podcast with Scott Osborn, the Pilot's Planner.
Information is for illustrative purposes only and does not constitute tax, investment, or legal advice. Always consult with a qualified investment, legal, or tax professional before taking any action.